an important field of financial management. But for fraud detection and prevention, there is still an ongoing debate. Can businesses primarily rely on traditional accounting, or is forensic accounting the future? Traditional accounting ensures financial compliance, accurate financial reporting, and strong internal control, along with which frauds would be prevented even before they happen. Whereas forensic accounting helps to uncover financial crimes, helps for risk detection, and also provides legal support. Through our discussion, we'll understand the forensic accountant's role in fraud detection. Where the technology has its impact on both the fields, the main question is forensic accounting an essential safeguard for fraud prevention, or just traditional accounting with proper compliance is enough?
Traditional accounting may record transactions and ensure compliances, but it doesn't prevent fraud. Forensic accounting goes beyond numbers, it investigates financial crimes, fraud, and embezzlements. Look at the Wirecard scandal 2020. We all know about this. Traditional accountant signed off financial reports, but forensic accountant uncovered a 2 billion fraud. Today's financial world is full of manipulation, and forensic accounting is key to the financial security.
Samantha, you talk about fraud, right? But the best way to prevent fraud is strong internal controls and also accurate financial reporting. That's where traditional accounting comes into picture. Companies don't need forensic accounting if they maintain proper bookkeeping, tax compliance, and also audits. Look at successful companies like Microsoft, Apple, Tesla, and such other companies that rely on traditional accounting daily and not on forensic accounting.
Diksha, you assume that big businesses or good famous companies with good accounting practices don't face fraud. It's just a myth. Even companies with strong internal controls are at risk at this point of time. So let's take an example of this case. Everybody knows Satyam case that happened in 2009, right? It's like a perfect example for this scenario. The company inflated its profits for many years, and while auditors failed to detect them, right? So forensic accountants don't just detect your fraud; they even analyze your risk and prevent from financial crime and assist in litigations.
Yes, Shubha, but forensic accounting sounds great. But by the time a forensic accountant steps in, the damage is already done. Whereas a well-structured traditional accounting helps to find out the fraud before it happens. There are certain SAP softwares like that of QuickBooks and all, the ERP softwares like that of SAP and QuickBooks and all, which helps to find out the discrepancies early. So a forensic accountant is not necessary if the company invests properly in the financial management.
Alan, I think you are oversimplifying the things. Fraudsters are smarter than ever. They manipulate traditional accounting system, use offshore accounts, and even tampering with financial statements. Forensic accountants use Benford's law, AI-driven fraud detection techniques, and cybersecurity tools to expose the financial manipulation. Can a traditional accountant track it? Cryptocurrency frauds? You have seen it nowadays. No, but forensic accounting can.
Samantha, forensic accounting has its place, but it's very niche field. 98% of businesses rely on traditional accountants for taxation, payroll, financial reporting, and such other necessities. Small businesses don't face large-scale fraud, and also they need affordable accounting services. Why spend thousands of rupees in forensic accounts when you can invest in good accounting practices?
Diksha. So frauds cost businesses far than hiring a forensic accountant. According to ACFA, companies lose around 5% of their revenue annually to their frauds. So even small businesses face these employee theft, invoice fraud, and cybersecurity breaches. Traditional accountants can't investigate these crimes very in detail and can't solve it. Only forensic accountants can do this better.
Yes, but the
a thought-provoking discussion between forensic accounting and traditional accounting. One thing is clear, we require both to ensure financial security. Traditional accounting provides strong foundation for financial planning, compliance, fraud detection, and makes it indispensable for business. Whereas forensic accounting helps in uncovering frauds, analyzing financial risks, and also strengthens the cyber security in today's digital world. Rather than viewing traditional accounting and forensic accounting as competing fields, it is essential to know that they are complementary in nature. For today's challenging financial situation, integration of both forensic accounting and traditional accounting is essential to ensure that there is financial transparency, security, trust in today's corporate world.